are joined by Andy White, who's the Chief Executive Officer for Australian Payments Network. Thanks so much for your time, Andy. We do appreciate it. I think let's maybe get some context around what are real-time payments and how they are set apart from the traditional payments that we know.
Sure. Well, thanks for having me, first and foremost. In terms of real-time payments, I mean, it's interesting, you know, the title involves the words real-time, and so everybody focuses in on speed. I mean, that is one benefit of them, and it's obviously a benefit in terms of economic productivity. So if I'm a recipient of that payment, whether I'm a consumer or I'm a business, I'm getting that payment in, I'm getting used to those funds immediately. So there's a clear productivity gain from that. But the way that most real-time payment systems have been built, interestingly, brings other benefits with it. So, for example, in Australia, when our Reserve Bank came up with the idea of a real-time payment system, which was back in 2011, they were really clear on some of the other facets that it should have. So they wanted it to be available 24/7, 365. They wanted it to benefit from rich data, so what became the ISO 20022 standard. And that data then can be used by companies to automate reconciliation. It can be used to improve AML, CTF, sanction screening, those sorts of things. They also wanted it to come with what they termed smart addressing, which meant we could get rid of, you know, making payments using our bank sort code and our account number, and actually link it to a mobile phone or an email or a unique Australian business number if I'm a corporate. So that's a benefit in and of itself. And then the last one was, which sort of came over time, was the use of that data and that smart addressing to create things like confirmation of payee, which obviously is a real benefit in dealing with fraud and scams.
And how would you say that this is set to be the next frontier of transaction banking?
Yeah, so I think for all of those reasons, you know, we've spoken actually a lot at PIPC already about the challenging economics of payments. You know, there's less margin if you're a bank or even a non-bank in processing a payment. But if you can add value to the customer, so alongside that payment is going data that they can use in different ways, then that potentially increases the margin of those. And so it's about releasing that value and then having a grown-up conversation as a transaction bank with your customer.
The question that's also come up, I'm not sure if you would be keen to answer it, but who owns the data? Because everyone's like, it's out there. Who owns the money? Who owns the data?
Yes, we're really clear on that in Australia. So we have a sort of slightly different approach to most countries who've gone with open banking. So we have something called the consumer data right, and even the title of that, we're on titles, even the title of that emphasises the fact that it's the consumer. So data only gets moved if the consumer is signing off that they want it to be used. And the beauty of that is actually it applies not just to banking but also to energy. It's a cross-economy initiative, but the consumer is absolutely at heart. So if it's my data, it's mine. It's not anybody else's.
And maybe the risks when it comes to how payment systems are changing. I mean, the question around fraud, scams has been coming up a lot now with how payments and the whole system has changed. Is the risk greater?
So I think, I mean, if you look at the numbers, certainly on the scam side, yes. I mean, I think we would argue in Australia the fraud side, the distinction between the two, fraud is an unauthorised payment, scams are authorised. I might have been misled to authorise the payment, but they're authorised. Fraud we're definitely seeing coming down, but we've put real effort into do that. And in the Australian context it was easier because face-to-face fraud, so what gets called card present, so when I'm using my card at a point of sale or at an ATM, that's been incredibly low for a long time in Australia because we were very early adopters of chip and PIN and they're very early adopters of contactless. So effectively the fraud was all in the online space. So we at AusPayNet, as the industry body, we created a framework around that problem where effectively there are fraud rates that apply on both the issuing side and the acquiring, therefore the merchant side, aimed at reducing that fraud, and that's been pretty successful. The problem is the fraudsters don't give up. They target the next thing. And so what we've seen is overseas card fraud. So where an Australian is using their card with an overseas merchant, we've seen that grow. That's much more difficult for us to control because we don't regulate the acquirers, the overseas acquirers. But we've got sort of plans working with issuers and card schemes around that. On the scam side, that had really mushroomed in terms of the scale of the problem. The good news again in Australia is we formed a national anti-scam centre. Interestingly, that doesn't look at it from just a sort of banking or a payments perspective. It gets the digital platforms in, it gets the telecommunication companies in, because that's where people are socially engineered, so they're authorising the payment. So it brings them into the fold, and since that was created in July 2023, we've seen scam numbers go down by 36% in 2 years. That hasn't happened anywhere else in the world. And that's before we actually bring legislation, the so-called scam prevention framework in, which is coming in soon. We should hopefully see those losses decline even further.
And with all the rise of real-time payments, I mean, we have digital wallets, you have these QR codes, and even CBDCs. Do you think that this is going to be the future of payments moving forward? Do you think that we'll have this will be the universal form of payments, or how do you think that's going to move?
Well, the challenge there is that there is no universal form of payment, right? I think it's really interesting. You've got two trends that sort of seemingly work against each other. You've got one which is that fragmentation of the payment system. So almost this sort of proliferation of options of ways to pay. The other trend is that you've got, through AI and things like agentic commerce, so where I can use an AI agent to pay on my behalf, embedded finance, as some people call it, that actually sort of makes the payment invisible, and so that's almost a sort of harmonising factor, because it makes it look like the payment is just part of the digital experience. So you've got those two trends that operate in different ways. I think the fragmentation one will get solved for. So if there is a sort of universality here, it's because we'll have orchestration layers over the top, and we'll have standards that guarantee interoperability between those different payments, which will solve for it. And I think the other element, which again we've done in Australia, which is worth thinking about, is sort of having a national payment strategic plan, as we call it, or a national payments vision, as the UK is thinking about it, which might then sort of think about, well, which payments should use which individual payment rail.
And there's obviously an issue of trust. I mean, my mom is very old school. She still prefers cash. And I'm like, Mom, there are better ways to pay. But there is a trust deficit. And obviously with innovation and the older generation not really trusting technology, and also might not having access to that technology for a number of reasons, how do we navigate that for the future?
Yeah, so there's a couple of things there. I mean, I think what I've just described challenges trust, because if, for example, I'm not your mum and I'm paying with an AI agent, how does the person on the other side trust that AI agent and know that it's acting on my behalf? How do I know that the AI agent isn't hallucinating and going rogue, and so on? So all those concepts that we have about trust, safety, and indeed resilience, we need to make sure we embed in modern payment systems. I think the good news for your mum, well, certainly if she was based in Australia, I don't know about here, is that we've made a commitment, and so has the government made a commitment, that we're maintaining cash as an option. We recognise that people do want to use cash. It's not like cheque, for example, which is a genuine legacy system. It's uneconomic. Cash will maintain, and will make sure that the economics around cash distribution work, so that people can continue to use cash if that's their preference, or they just want to use it as a fail-safe mechanism, the old cash under the mattress type thing.
That joke is quite sensitive here in South Africa, but thank you so much for your time. We appreciate it. Thanks so much.
Thanks,
Andy.
Heidi.